Hi guys, what's up? It's Kehlani here, and today I'm going to explain why everyone is piling onto STRC shorts, what my charts actually say, and why it might be overcrowded. So, as a quick overview, STRC is paired up with MSTR. It's basically a stock that trades more like a stable coin. It stays at $100 year round. There's been some dips lower, but it mainly trades around $100. And that's because they promise an 11.5% annualized variable dividend yield, which basically means they'll pay you for holding the stock, but you won't earn interest on the actual shares. Now, the dividend yield held steady through 7 straight rate hikes, but it's not really a fair indicator because the price is reflected based off Bitcoin. Let me show you exactly how the CEO describes the stock.
When we sell STRC, we're selling equity. When you give me $1 million to buy a preferred equity with a variable dividend, if you read the securities document and you understand what that security is, you're entering into a perpetual swap. I am agreeing as the issuer to give you SOFR, the standard overnight funds rate, plus a credit spread determined by the company. And you are agreeing to give the company that capital forever. And you're not getting the money back. So it's not an overnight loan. There is no collateral call. You have no redemption right. You can't, it's not like you can go to the bank and say, give me the $1 million back tomorrow. In fact, you're not getting the money back ever. If the company couldn't pay the dividend without being insolvent, it would suspend the dividend for 12 weeks. By law, you can't pay a dividend on a preferred stock that would create an insolvency event for these. STRC is the simplest instrument we've ever created from the point of view of the investor, but it's the most ambitious piece of financial engineering from the point of view of the issue. You are agreeing to give the company that capital forever. And so that, and you're not getting the money back. You have no redemption right. You can't, it's not like you can go to the bank and say, give me the $1 million back tomorrow. And
perpetual equals capital forever. The company basically locks up investor funds to continue buying more Bitcoin. But no redemption means they don't owe you anything. They could stop paying the dividend yield tomorrow and the company would face no liability. You can't ask for your money back and they never have to pay the principal. Basically, the yield is a distraction from the underlying risk. This volume profile chart filled 72% of the last 30 setups that I've backtested. Greed bias anchors to the dividend yield while ignoring the perpetual swap reality. This company trades more like a Ponzi scheme. On X, the sentiment is extremely bearish just because of the dilution of shares and liquidation risk. If Bitcoin were to take a major hit, then this stock would too, because that's the main underlying asset. Basically, if you're long on the stock, you're long because of Bitcoin and you're staying in for the dividend yield, which might be extremely risky. But if your technicals say otherwise on Bitcoin and you believe it's probably going to plunge a little bit lower than 74, then you might want to go short on this. But is it really worth taking on all that extra risk shorting when you could just buy a put option? I don't know. Tell me what you guys think about this. Let me know down below in the comments. And don't forget to subscribe so you don't miss out on real moves. Bye.